Well, once again, I'm brschultzSP500. Thank you for joining me. It is February 8th today, Saturday. I had a little break in my schedule here after some kids' birthday parties and such this morning. Wife is pregnant, so she is asleep upstairs, and the kids are all watching TV, so it gives me a chance to jump down to my office area and create a video. So, last night I was wondering, if I gave people a call that's 2 days, 2-3 days out in time from my last call, that's not really enough to keep moving with. They would need the next piece of the puzzle, which would be the low that would come after the peak, right? And so the 10-minute gold wave is what I'll be showing you today, and that is for the macro view. And so I believe that the macro peak is coming in. I believe I was saying that this might occur around this time frame, so I've had to adjust the 10-minute gold wave a few times, so I'm happy to see that it's still trending that way, right? So I think what we're seeing is we'll see like a double peak with the peak that was on January 23rd or 4th. We go and maybe retest that peak, or maybe we fall short of it just a little bit, or maybe we exceed it a little bit. Not really sure, but either way, it's like a double peak, right? Double top. And I think that will be the final peak in the markets with the CPI read. Maybe it's kind of like Friday morning, right? That we just saw. The model predicted to be a bust on February 7th. Well, it didn't happen right away. The markets opened, they were, stayed positive for an hour or so, and then all of a sudden they collapsed, right? So who knows? Maybe the CPI reading comes out and it tanks the markets, or maybe the CPI reading comes out, markets stay buoyant for 2 or 3 or 4 hours, right? I don't know. I can't say what the driving factor will be, or exactly when it will break. But the count is on the 10-minute scale, so it makes me believe that it will be a macro peak for markets. It'll be that double peak that we've been looking for, and then hopefully that long-awaited March 21st, 2025 macro bottom is then in play, right? Then we finally get to see some movement towards that direction. I would think that it'd be like a 5,300 to 5,500 bottom around March 21st. I could be wrong, They usually get like a 10% correction. When you finally get a correction on this gold wave, on the macro zigzag, it kind of produces like up to a 10% correction. So that would make sense to me. That's where a lot of my daily moving averages, daily pricing harmonics are at right now. So that's kind of how I gauge that. So that's how I'm getting to my price targets that I'm throwing at you. So again, I think that there'll be some type of last maneuver upwards here into February 11th, 12th. I went long on Friday around 6,028 on the SPX500 USD. If you want to look at that, you can go to tradingview.com. The reason why I use that is it's the continuous futures contract, and that's how I measure my 70-point swings, right, or 80-point swings, 77-point swings. So if you remember the video 2 videos ago, I said that I proposed that February 7th would have some type of crash ending of about 70 to 77 points, and that's what we actually saw on Friday, so that was spot on. Again, that's tracking the SPX500 USD. I'm not sure why people are kind of hung up on not being able to understand markets. You have to start where I'm kind of leading you, right? At least in my view. I could be completely wrong, but in my view, you need to start off by going to tradingview.com, bringing up SPX500 USD, looking at it on an hourly, 2-hour, 3-hour, 4-hour type chart. And again, once donations start pouring in, once people start really showing me that they enjoy my work, there's at least a dozen or two right now that are donating regularly, $5, $10, $15, $17, some more, right? But I mean, once there's quite a few people donating, then obviously I'll expand my repertoire of slides in my presentations. I have to give you an incentive to consider donating. If I give you everything up front, most likely a large majority will not donate at all. So, but once I feel there's an overwhelming support, right, or there's quite a bit of donations just pouring in all the time, or raining in all the time, then I'll be, more encouraged You consider donating, I'll consider, giving more information. Both sides of the fence, we consider what we want to donate, right? You consider it a gift, I consider it a gift more information as well. So it's kind of it works both ways, right? I have to consider what I want to give, and you have to consider what you want to. So a good balance there. So like I said, let's suppose like lots of donations start pouring in, maybe they're all $2 each. That'd be still awesome. If there's 100 people that donate $2 each, I don't care, right? It's still cool because it's the volume of donations, right? Sizable donations are always fun. Anyone knows that, right? But how many can you actually get to donate? That's the question, right? If you could get 200 people donating $1 or 150 people donating $3.40, let's say, right? It's just having a lot of people there cheering you on. Everyone wants the crowd there, right? You want to go to a Michael Jordan game and see the stands full because everyone wants to see the guy play. Not you don't want to see the stands empty and then be like, oh, maybe this isn't a great show, right? So that's kind of the point. And once I feel the arena start filling up, then I'll start providing more and more slides that kind of go into more and more my theory on pricing harmonics, 80-point swings, things of that nature. I'll explain them in the video. I'll do the print screens. I'll make slides of it, right? So, and then obviously, hopefully that's to your benefit. But in the meantime, you can go to tradingview.com. You can put in SPX500 USD. You can look at the continuous futures contract. And then you can count the swings. You can see that yesterday's high was, let's say 7,000, right? And then you can see that the stock market drops 80 points from 7,000, so down to 69.20, let's say. This is all theoretical, it's not real. You can count the points yourself. You can see the drops yourself. That's where I start to make my decision. Once I see an 80-point swing, that's when I start thinking, okay, I want to start betting the opposite way. You can do exactly what I do. So in the last video, I said that from around the February 3rd peak, plus or minus 1 day, you would have about 5 waves into the February 7th bottom, right? So every time there is this a bump up of 70, 80 points, I would short it. And I said on my blog, on brschultzSP500 Goldwave WordPress blog, I said when I went short, and I shorted shares specifically for the reason that shares nowadays you can trade them 24 hours. So if the market drops 70 points after hours or 50 points after hours, I can still make money on that because I saw the 70 point or 80 point, 90 point run up during the daytime hours. So I was able to take advantage of the 24-hour trading that is available to index linked ETFs, right? So that's why I did that. That's why I do that. Sometimes when I feel like it's going to be a sideways market, like the last week, that's when I was doing that. So, and then I tried to buy puts closer to the 7th. And some of them worked, some of them went flat, so that was kind of a sideways trade. But that's how I trade. I'm looking for those movements. And then if you see a 70-point drop, you can consider exiting your put, right? Or you see a 70 to 77, 80-point pop upwards, you can exit your call. That's how I trade. That's what's going through my mind as I'm watching the SPX500 USD. And so if you see me quote some type of number, 97.77% of the time on my blog or in this video, it's based on the SPX500 USD. So, and again, as someone might wonder, like, do you know a lot of these people on YouTube? I know nobody on YouTube. So some of you might be like, how do these guys know so much about your work? They followed me for some time and they've got very comfortable with understanding the rules that I play by. And some of them, sometimes laughingly, it seems they know it better than I do. And they explain it really well. And so hats off to them. Kudos to them. Someone said, yeah, he's explained in other videos that his 10-minute gold wave is the macro model and his 5-minute model is his micro model. So if you think that you're going to see these giant moves off the 5-minute wave, you're not. And whoever it was, hats off to you. That's exactly right. You need the more macro view, the mid-range view to kind of understand where these bigger swings are going to happen. And so that's where today's video is going to take us. I wanted to put this out for you so you could see that 10-minute model, and then you could see that I believe that there's going to be the major macro bottom. I think it's out in mid to late March time frame, but I will also show you a 10-minute model today that will show you where the next swing trade bottom is from the mid-range 10-minute gold wave model as well. and that will be roughly around February 20th. So thank you again for joining me. I'm brschultzSP500. I made the long name because when you Google that long name, it's the only thing that comes up. So I thought that was better marketing than BR Schultz by itself, because anyone's going to put BR Schultz. There could be lots of BR Schultzes out there, but probably not anyone else that's going to put SP500 at the end of their name without any spaces. So that I wanted to separate myself out. So if you search for me, if you send my name on to someone at a Super Bowl party or yada yada yada, if you say it's BR Schultz SP500, then people are more likely to find me, right? I think that's pretty simplistic, because I'm the only search result that came up when I started creating all this, when I started creating my my name, my handle. So with that said, if you haven't subscribed, please consider it. If you haven't donated, please consider it. Thank you for all the donations that have come in. I'm starting to get some repeaters, so repeat donators, so thank you so much. Some people are repeat donating $34, $77. Thank you so much. It means a lot to me. Thank you for donating my favorite number, 7s. I appreciate it. And when my birthday rolled around a little bit ago, my mom asked me what I wanted, and because I was turning 43, I asked her for $7.77. So yeah, there's a lot of 7s in my the numbers of my name and things of that nature. So Schultz is a 7-letter word, if you noticed. Yeah, with that said, let's keep moving on. Oh yeah, and I'm having my 7th child, right? So yada yada yada. Alrighty, let's move on to some graphs. Donation QR codes and donation link below this video, and PayPal link below the YouTube video down in the description. Thank you for following me. So yeah, I've had to work on my 10-minute model for quite a bit. Trying to fine tune it, as you might imagine. The 5-minute model seems pretty rock solid. You know, it picked out February 7th, and wow, what an amazing call. Honestly, it just right on the money, just crushed it. Right, last minute buzzer beater by the MJ model was phenomenal, just unbelievable. And then on my blog, I said the night before that Jaws was right underneath the boat, because I have a certain trend line, trend that I have identified as what I call my Jaws trend. And it's when the trend forms underneath everything. It's kind of like a hidden under the surface type stealth trend, and it creates a giant collapse in the markets. And so you think everything's fine, or the market starts swimming higher and higher and higher because it's trying to get away from Jaws, and then it finally thinks it's safe, like in early morning February 7th, and then all of a sudden it gets the life taken out of it by Jaws, so to speak, and blood everywhere. So then the market collapses and caves and bleeds everywhere profusely, right? Just like it did on February 7th. So that's why I waited till the end of the day on February 7th to go long, is because I wasn't sure how bad it was going to get into the end of the day, and that's why I created my video towards the end of the day. Okay, so this is a 10-minute model and 10-minute algorithm. Essentially, this is my macro model. This is, you know, a higher level than the 5 minutes, so that creates bigger trends, bigger patterns in the market, and bigger swings. So therefore, I think that with this 3 or 4 touch points, you're going to see a macro peak roughly here on February 11th or 12th. And I think this will be a substantial peak in the market. Like I said, I think it'll be like a second peak versus the January 24th peak. So I think it's kind of like a retest of the highs, and then I think we're starting to break down into the late March macro bottom for markets. And personally, I've been keeping my 401k in cash, and I'm kind of waiting until then to consider putting my 401k back to work, because I would like to see about a 10%, 12%, 15% drop in markets, if we could be so lucky, by mid-late March. And then I think there's a little wiggle room to start moving up. And then, you know, if you want to watch my multi-year peak video, basically I think that the market is going to peak in around the Super Bowl of 2028. So if we were to bottom in March of 2025 and then peak around same time around 2028, so to speak, you could have a little less than 3 years of run up in the markets. And then we have the window of the Great Depression after that. If you want to watch that video, you certainly can. Yeah, just go on my my video reel on YouTube. You can find it there, or onto my WordPress site. I believe it's one of those sticky posts. So if you go on my WordPress site, it's the post at the very top of the blog. And I think you can search for brschultzSP500, and you can find my blog that way as well. Okay, so you have 3 or 4 touch points here, and that gives you the macro peak for the S&P 500 on February 11th or 12th. I believe it will be the CPI reading. Now I'll be watching SPX 500 USD, and I have to balance it with being the macro peak, right? So if we see a 70-point run up, after hours on February 11th into the 12th, it makes it very tricky to trade a put, right? Because sometimes you let's say markets are flat on the 11th, and then they run up after hours into the early morning on the 12th. 8:30 rolls around, CPI comes out, and then crashes the markets or something. So you can't actually take advantage of buying puts against the high, so to speak, but it shows up still nonetheless on SPX 500 USD. So sometimes those things happen, so it's a little difficult. So I might be considering trading shares, shares that are traded 24 hours. If that were to happen, if I see that type of situation happen, I might go short just before the CPI read. If we see like a 50 to 70 point burst upwards pre-market, I might go short shares, triple leverage short shares or something. That's my own personal trading style. But if not, if it just rolls around, or maybe on the 11th, let's say early morning the 11th, the markets take off, jump up 70 to 80 points. By end of day, they're up. We see a 70 to 80 point swing during the day, right? So let's say on the early morning on February 11th, let's say markets sell off 30 points, right? And then they jump 70 points off the bottom, right? So even though you're down negative 30, then you swing up positive 70 off that bottom, right? So that's a 70-point swing in its entirety, or 80-point swing, let's say. So if that were to happen, then I would start considering shorting end of day February 11th. That's my own trading style. Because you have the full extension, right, of the 80 points, 70, 80 points into the end of day 11th, right? That would be the extension I'm looking for. I'm looking for some type of 70 to 80 point extension to then look to change my bets on a market directional change, right? So again, if we're sitting flat early on February 11th, markets drop 30. Let's say they're at 6,000, right? They drop 30 down to 59.70. Okay, and then they jump up 70 to 80 points from 59.70. So they jump up to 60.40 or 60.50, let's say. At that time, let's say they jump up to 60.40, 60.50 end of day on February 11th. At that time, I'm going to go short anyways, right? Because in my mind, if this model is that accurate about where the peak is, even if there's short-term burst up on early morning February 12th, it's not going to last too long. That's my own personal opinion. It's how I trade. You don't have to trade that way. Obviously, I encourage everyone to use their own tools and their own indicators. I'm not a professional trader. I'm not a licensed trader, so none of my advice or none of my commentary should be taken as advice. I'm not licensed in any way, shape, or form. I'll say it 1,000 times because people sometimes like to hear things 3 or 4 times before they actually hear it. My kids are included. I'm included. I think most humans are included. I think, we as humans need to be told 3 or 4 times to make sure that people actually know what we're trying to say, or we understand what other people are trying to say, that they're serious. So that's why I do try to repeat myself more in these videos, because I get some nasty grams every now and then in YouTube comments, and people that actually listen to it then say, hey man, he told you 3 or 4 times the same thing. If you weren't listening, that means you never watched it. More likely just looked at the thumbnail on the video. So those of you who actually watch the videos, hopefully you learned something from it. You gained some knowledge. So again, if I see like a 70-point swing end of day on February 11th, I'm looking to buy my puts near the end of day for February 20th. And let's jump on to the next slide now. I think we spent quite a bit of time here. So if you haven't subscribed, please consider it. If you love my work, consider donating. But even more so, if you love my work, if you're blown away by it, if you think there's no one else out there that can compete with it or or you would never find their work online for free, please share my work. It would mean the world to me. If you have a relative, close friend, high school friends, college friends, work friends that would really enjoy my work, please share my work with me. It's how I'm going to grow my following and hopefully maybe go solo someday. So please consider that if you would. And yeah, let's move on to the 5-minute chart. So this is the macro chart. We're going to move to the micro chart now. So this micro chart, somebody that saw my blog actually saw that this predicted that there could be a peak on February 6th. And so that's exactly what happened. So that was pretty sweet. So I'm actually learning that this dark burgundy wave is actually more accurate than the green wave was used for the bottoms. So I really only use the 20-second model now for picking out peaks because it's so amazingly accurate. It ties out with my other models, so for peaks. So that's why I've kind of fallen in love with it, and it's kind of my default for double checking my other model for peaks at least. So this is saying that this is proposing that with the 1, 2, 3 touch points on the yellow with the yellow trend line, you shoot the yellow trend line at its trajectory out to the top of the graph. You drop the red line straight down, and it hits the date, and whatever date it hits is where the peak is proposed by the model. And so if you just use that system, that technique right now, you look at the 3 tops, throw a yellow trend line on there, it hits the top of the graph, right over the top of February 11th to 12th, drop the red line down, and bingo, it hits right in between the 11th and 12th, and that's roughly where the CPI number comes out. So again, I think it's possible that we could see a nice 70, 80 point swing up into the end of day on February 11th. Very possible. All right, so that's just a recap of last video, and so now let's move on to the February 20th low. So it'll be shown on the macro and the micro, I believe. So let's move on. Okay, so this is the 10-minute model, and you kind of just have a 1-2 count, which is enough here, because I don't have enough space to run all the way backwards in time until it finally finds its first touch point. But the 1 and 2, that'll give you kind of the rough estimate of February 20th. And there might be a holiday in there, so if it is, say, whatever day it is, if it's the 20th or before, you have to add a day, which makes it a little tricky sometimes, right? Because if, let's say, the 20th were a holiday, and it may be, I don't know, I'm just talking off the top of my head. If the 20th is like President's Day or whatever, and it actually falls on the 21st, that's a tricky one, right? Because futures might actually be trading, and they could be skyrocketing when there is no trading during the day. So therefore, it might be the 19th or whatever, or the 21st. So those days are tricky because so I don't know if the 20th is President's Day or not, but I have a hunch it has a feeling like it might be. So anyways, it's the 20th plus or minus 1 business day. A business day is the day that the markets are open for trading during daytime hours, right? So if the market is not open during the daytime hours, that means it's not a business day. So please, if the 20th ends up being a holiday and you say, well, I didn't peak on the 20th, markets were closed. Well, again, that's why I say it has to be a business day where trading is open. So that's the tolerance of the model. It must be strictly adhered to. You need to, that's an important point about the model, is it has a tolerance window. So that's why on January 31st, because the February 3rd call was the 3rd, so plus or minus 1 business day would be the first day that the model could get its call for being accurate, was the 31st of January, right? So when we had a 70-point pop after hours of Apple's earnings being reported on January 30th, then markets opened higher into January 31st. They had a 70-point run from some type of swing low on January 30th to some type of high on January 31st. I took that 70-point run as a signal that that's where I wanted to short, right? Because it had a 70-point run. It's going to change directions more than likely in my mind. In my mind, it could be wrong. In my mind personally, for educational purposes, I felt like if it has that 50, 60, 70, 80-point run into roughly my date, I'm not only is the model getting credit for calling it the win, but I'm changing my bets because I want to be the first one to change my bets, right? If we have a 70-point run up from the 30th to 31st, and the 31st counts as a win for the model, then I'm not gonna short guess the model at that point, right? I'm going to take advantage of it. So that's what I did. I put 50% of my account into shorts and into puts on early morning on January 31st because we ran up about that. I think that was at 70. There's like a 70-point run up. I counted it. I looked at SPX500 USD on TradingView.com. It's exactly what you can do. It's exactly what you can do. And a 7-year-old can count up 70 points. So I believe most adults can. So I don't think it's too hard for people. Sometimes people just give me crap, but again, I know they're not doing their homework. I know you're probably not looking at SPX 500 USD. If you looked at it, you'd be like, dude, that's exactly what you said would happen. It would run up 70 points. It did run up roughly 70. Maybe it ran up 65. Maybe it ran up 62. Maybe it ran up 72, 74. It just has to be roughly there. It gets you in a position where, in my opinion, you've cut off a lot of the risk, right? You just had a giant, almost a 1% move up in the market, and so you're shorting into that. At the tail end of that strength is the hope, right? That's my trading style. So if you wonder how I do it, that is a big part of it. Now, I've also studied moving averages extensively. I call them pricing harmonics. But I go on to TradingView.com, and they have so many options of moving averages there, of different types of moving averages, weighted moving averages, exponential moving averages, blah, 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 blah. And I spent probably 3 to 4 months of my life just studying those, just looking at monthly data, weekly data, daily data, 4 hours, 2 hours, 1 hour. And what I did is I set about 15 to 20 moving averages so that when you flip in between time periods, different moving averages come out to the same place that they did on the other time period. So let's say on a daily time period, let's say a certain moving average is at 5,900, right? So when you flip to the weekly, one of the different moving averages, another moving average I program comes out to be 5,900, right? So as you're flipping back and forth between these time scales, it's very interesting to me that if you do it correctly, each time scale, the moving averages will each still be at the same level, right? Your first moving average will be at 5,900, and then when you skip to another time period, maybe the third moving average that you use is at that exact same pricing level. So the reason why you do that is because when you flip back and forth between the time periods, they complement each other. They're all saying the same thing, right? They communicate with one another, right? So it's kind of like a handoff, right? So you're saying, oh, if you're going to be over at my neighbor's house, how about you take this meal I prepared for them, take it over to them. So you transfer all the knowledge and the gift over to the meal over to the neighbor's house, right? So the meal was here at your house. It's also at your neighbor's house. It's the same meal. It says the same thing. It tastes the same ingredients, right? It's equal from one house to the other. It stayed the same, and so that's the same deal with the moving average, the pricing harmonics. So if one pricing harmonic is at 5,900, when you switch to another time frame, there should still be a different pricing harmonic that is at 5,900, right? So as you flip through 2, 3, 4, 5 different time periods, although the pricing levels are still showing up the same on each different time period, right? Then you've really got a beautiful system, because no matter what time period you're using, 5,900 shows up as a major bottom, right, or a major support resistance line, right? So if you do that enough and you study the S&P 500, SPX 500 USD enough, you can see these harmonics. It's quite interesting when you jump to like a 4 hour and 1 hour, or 2 hour and 4 hour. The same pricing levels show up with different moving averages, and to me, it's a thing of beauty when you can get all those levels to transfer from one time period to another time period using different moving averages. Then I really feel like my moving average system is doing quite well. And then you know what you're kind of looking for too. Where major resistance is on like the 2 hour or 45 minute on TradingView.com, or where some of these death crosses are. I've got a couple tricks up my sleeve, but like I said, I want to save some interesting information for future presentations. But maybe someday I'll give you some of my tricks. Again, if the donations pour in, if we have like 34,000 followers on here someday, maybe I'll really give you some of my best tricks that I use on my moving averages. But that's still a long ways off. Okay, so this is the macro model. Let's move on to the micro model for the February 20th low. So this is an odd bird. Basically, you can see where the black line is drawn. It just has 2 touch points, but because it's the gold wave, it's pretty powerful. And so, I was looking at this, I'm like, you know what? I'm guessing that there's gonna be some type of major low around the 20th. Now you might say, hey, that's not really 3 touch points. You're absolutely right. But what's interesting is if you were to take a line and take it from the bottom of the gold wave on roughly February 5th or 6th, on that very bottom of the gold wave, and then bounce it off the top of the gold wave on January 6th or 7th, and then draw that diagonal up, it actually hits the top of the graph right over February 3rd, where markets had that huge collapse, right? Amazing. It's very fine-tuned, honestly. And if you want to go back and review the February 7th low, I think that's some of the best work of the model. It had a 1, 2, 3, 4 touch point into February 7th. And man, oh man, did February 7th end up just as exactly and pristinely as it called it. Just on the nose. So again, if February 20th is a market holiday, which it could be President's Day, I don't really remember, but I do remember I think President's Day is in February. It could be plus or minus one of what? That'd be February 21st would be the official call, actually. So plus or minus 1 business day. So if the 20th, let's say, is a holiday, then that means the 21st is the next business day. So it'd be the 19th and then 21st for your order of tradable days. And with that, again, I think the macro peak of the market is roughly February 11th or 12th at that CPI reading, and I think the bottom is going to be sometime in mid-late March for the final low. And again, I think that bottom will be around 53 to 5,500 if I get my way, if I've measured things out correctly. And then, yeah, so this is a macro low of some sort, it would seem, because it shows up on the 10-minute model. So I'm guessing that there's some kind of power that you see off this low. I'm guessing the market could run up 200 points. Sometimes you get like 200 points off these lows, right? Because what did we run down to on February 3rd? I think if my memory serves me correctly, we ran down to like 59.20, and then we ran all the way up till near 6,100 again, right? Yeah, we hit 6,100 on February 7th. Yeah, duh. We were sitting right at there when the whole thing crashed. So that was a 200-point run, and yeah, so I wouldn't be surprised if you see some type of 200 to 300 point run, possibly up to 300 points off of the February 20th. So does that mean we crash like crazy? Well, maybe in the least we drop 300 points, right, to recover maybe 200 or 300 points of those back, right? We could just pop back up to the top. I don't really know. It's difficult because if we truly are at some kind of 30-year peak in the markets, again, let me say it again. If we're truly at some type of 30-year peak in the markets in 2028, I'll say it one more time. If we are at some type of major peak, like a 30-year peak in the markets in early 2028, then sell-offs might get harder and harder to really get them to pull down a lot, right? You may not get 10% sell-offs anymore in the market, right? The slack might be getting tighter and tighter as you get to some type of macro peak. It's how markets work. They don't get as volatile, right? They only go one direction, that's up. So as we get closer and closer to the peak in February of 2028 or January 2028, it could look a lot like 2021. Our markets just skyrocketed in 2021. It's got that magnetism that just pulls the market straight up. So at some point, my guess is that there's just this magnetism that comes over the markets after the March 21st, 2025 low, and just keeps pulling markets up. Now, last note, yeah, those of you who kind of watch my blog, I've kind of been buying some of the different cryptos, and I could be wrong. I mean, markets could, or crypto market could keep go sideways or lower into the March 21st low with markets as well. But I've been buying SHIB USD, Doji USD, the official Trump coin. I thought I bought something else. Yeah, this the Pepe meme coin and maybe some other crypto as well. Primarily because I believe that crypto is going to have a macro peak in April, May of 2026. Now, why do I think that macro peak's coming? I think it's because President Trump has created this sovereign wealth fund, right? And you can't tell me that the guy who is pro-crypto and has a bunch of people pro-crypto around him isn't going to be more than likely putting a lot of crypto in his sovereign wealth fund. So that's why I think that you're going to see this, what could be a very strong move up in crypto between now and April of 2026. Because I think when President Trump finally starts reporting or revealing what's in the sovereign wealth fund, as he probably is going to be ask Elon Musk or someone to make it very transparent on the whitehouse.gov what's in the sovereign wealth fund of the United States, I think you're going to find that there's crypto in there, you know. And if let's say SHIB USD is in there, or the Dogecoin, or you name it, they could always add something later too. So there's always going to be speculation, more than likely, about what crypto could be added right over the next 12, 15 months. With that said, let's say, why I bought SHIB USD is obviously it's tanked horribly, right? It's down very cheap right now, and I got it at 0.001503 or something. So that's, who cares, right? It doesn't really matter. The point is it runs like mad into April or May of 2026. I think the reason will be because of the sovereign wealth fund. Our money managers, have the FOMO that they're going to miss out on not owning some of these pipsqueak Bitcoin or cryptos. That President Trump is about the working class, right? He believes more than likely that the working class doesn't own Bitcoin. He, in my estimation, he probably believes that the working class is going to own the SHIB USDs or the Doge coins or the Solanas, or something more household name-ish. And I think you're going to see the private equities own the Bitcoins. But I assume that President Trump would be more likely to buy some of these smaller coins too, because he realizes the working class probably has these smaller coins. So he's about the working class. That, at least that's the feeling I get. So I wouldn't be surprised if he comes out and says, we own 7% of the world's supply of this coin or that coin, right? Obviously, my hope is it's SHIB USD, right? Because he comes out and says, oh, we own 7% of the world's supply of SHIB USD, or Dogecoin or something, or the Pepe coin or whatever, because in my opinion, I just think he's going to make his voting base very more energetic around him if he invests in coins that they're more likely to have than the big funds. And that's the way he's always played, is he really tries to appeal to the masses. So I think the masses are going to own the smaller coins. That's just me personally. I could be completely wrong. That's my 2 cents. I'm not a licensed professional in any way, shape, or form. Please speak with a licensed professional prior to trading, prior to investing, prior to buying anything. I do not get any type of kickbacks from the S&P 500. Believe it or not, I do not have Goldman Sachs sending me checks to do videos on the S&P 500. I know, right? You're shocked. You are in awe right now that I do not have Standard & Poor's sending me checks every month to do these videos, or Goldman Sachs, or whatever the other big hedge funds are, BlackRock, right, or Vanguard. They're not sending me videos to do these, or sending me checks every month, paying me to do this, and no one's sending me crypto to speak about crypto. So I in no way get any type of financial benefit. The only benefit I get financially is obviously making correct calls, trading it correctly, and in the end, I believe if I make people money on the other end of this video screen, and if I make a few people millionaires over the next 5 years, or was it 3 years? 3 to 5 years, I believe that more than likely it will come back to me. The Bible says, if you refresh, he who refreshes others will he himself be refreshed. So I've always given generously to the waitresses and waiters at restaurants because of that Bible verse, because I believe that God's had mercy on me and been so kind to me at times. And I've been a caddy before at a nice country club. That was pretty cool. And they used to give out some very nice tips. And I always enjoyed it very much when I was younger, when I was 17, 18, 19, 20. So whenever I go to a diner, I always try to tip them very generously. as much as I can, right? Because to me, $10 tip is no big deal. But to them, it might make a world of difference. And then I drop a little Bible verse on it, 1 John 4:10. So if you want your homework, if you enjoy Bible verses, if you enjoy Scripture and faith, you can look up the Bible verse, 1 John 4:10. It's been a life verse for me ever since I've been married to my wife. She wrote it up on a chalkboard in our room, and ever since that day, I've never forgotten it. So whenever I leave a receipt anywhere with a generous donation, I always write down 1 John 4:10 on it, and hopefully God uses it to bless their lives with more knowledge of Him, and maybe they'll read the Bible as well. So hopefully you've enjoyed today's broadcast and are quite blown away by the model's 6 for 6 record. So this is call number 7 and 8 in this video, and can the model go 7 for 7, 8 for 8 in 2025? Well, I'm excited about it. And again, I can't give you every point in between. I cannot give you every swing point in between. I can only grade the models on the calls it calls. So if you're like, hey, that bottom isn't exactly where I thought it'd be, or the top isn't where it'd be, even if the two bottoms are higher or lower, or they're out of sequence, I can only do so well. So that's where your trading style has to come into play. I grade the model on the calls it makes. So if it says there's going to be a major peak around the 11th and 12th, then in my mind there should be a major peak around there. If it says there's a bottom around the 20th, supposing it's not a holiday, then that's what I graded on. I'm not going to sit here and try to say, well, is it exactly a swing trade? You can look at the dates. The 11th and 12th are a week apart from the 20th. So there's going to be swings, wild market swings between the two dates. There just are. That's how markets work. So please don't tell me it didn't move in one direction the whole time. That's not this. I'm trying to do my best to really create a nice boxed in swing for you. But if two dates only show up on my model that I can see, I'm calling them. And if it bottoms around the bottom and it peaks around the peak, and they're not precisely one above the other, it's still going to win in my book. So if you don't like it, I'm sorry. It doesn't bother me if you don't like it. You can't find anyone else like my work on YouTube. You can't. You cannot find anyone with this record. Can you? Because if you did, you would say, hey, so-and-so is beating you with his record. His record is 45 for 45, and he's predicting this date. No one has said that on YouTube. Believe it or not. I know. You'd be surprised. You would think that every Elliot Wave Guru on YouTube would be posting on my blog, hey, you're going to be wrong because my model is 70 for 70 because Elliot Wave is the most superior product ever. You never see that, do you? Never. You always see people try to sell you Elliot Wave software, but you never see them give you results. And that's where I believe my work sets itself apart. And for the gentleman that wrote in the comment section, well, I guess because the last call sucks so bad that Goldman Sachs will not be knocking at your door. Thank you for that comment. It made me laugh, and it made my wife laugh. So, you may have meant it to hurt me, but I found it very, very humorous. So I appreciate it. Made my wife laugh. So if you can make my wife laugh, it was a good day. But if you did mean it for humor, then it met its mark. But do I need Goldman Sachs to validate my model? I certainly don't, because if it keeps hitting the mark every time, I'm pretty sure my account will keep growing as it has been. Ever since I started doing these videos, my account has been growing and growing and growing and growing. Obviously growing very well on February 3rd with the short that it made. Go sideways and then grow some more. So if you have super hyper accurate models, as they've proven they are, then I don't think making money over the long term it's going to be that big of a problem. And therefore I really don't think I need Goldman Sachs whatsoever, or any other hedge fund really give me their 2 cents, because honestly their 2 cents aren't worth anything compared to this model if it can beat them. Now, if they can beat me, if they can show me a track record that beats mine, then maybe I want Goldman Sachs to talk to me. But if I understand capitalism correctly, the model that wins the most should be the top dog, and I think this beats every model that Goldman Sachs has, honestly, or stays highly competitive with in the least, right? So I don't think Goldman Sachs has anything on this model. I think they might be able to keep close to it at times, yep. But do I think they can beat it again and again? Absolutely not. I think it's one of the best there is in the world, most competitive. It's the MJ model. Again, I'm brschultzSP500. If you can find better work than mine, please post it in the comments. I will not delete it. If you can find more hyper accurate, long-term, consistent model of calling bottoms and peaks in markets, and you want to share it with my fan base, please post it in the link below. And now all of you that love Elliott Wave, this comment is for you. If you think that Elliott Wave can beat my model, please, by all means, show me someone that can predict or produce video after video and have extremely accurate calls with the same tolerance as I do. If you do, then please post it down in the video below. And for all those of you who follow my work, who watch these videos, please go down in the comments below. Please try to find this person or the system that someone is going to throw out there and see if it can compete. And I bet you it can't. I bet you they're gonna trash talk the model, my model, the MJ model. They're gonna say that Elliott Wave can beat it hands down, but they won't give any proof of it. They won't actually name their source. And that's the funny thing about, the CIA and the New York Times all the time. The New York Times always says, well, a source says. They never name their source. So it's bogus, it's crap. The CIA is doing a hit piece on someone, and it's fake, right? It's completely garbage, and innocent until proven guilty, and they never can prove you guilty because they won't name their source, but they always come up with a mysterious, made-up, fictitious name, right? It's always so funny to me because that's how 5-year-olds play, and 2-year-olds scream and kick their feet, and that's how politicians act. At least the non-trustable ones, that is. So anyways, that's my show for today. A rather long one, but hopefully I encompass so much material in here. You'll have to watch it 17 times, and then you'll have to share it with a few other people, because some of you actually want to hear me talk about my model, want me to explain it to the nth degree, and I can't blame you, because I don't really have a formula for this. It's a lot of mathematical soup that I had in my brain for years and years, asking God to help me to somehow get it out on paper, and asking him for guidance and wisdom, because I didn't know what I was trying to create, and I asked him if he would be so kind as to teach me. And I've never asked anyone for any guidance on how to build models. I've only asked the Lord, and he's been so kind. So if you want to learn more about the power of prayer, please consider buying the book Release the Power of Prayer. It's by the life of George Mueller, who raised roughly 10,000 orphans back in the 1800s solely on prayer. He never asked anyone for money. He only prayed for money, and the Lord provided for over 10,000 orphans in his lifetime, believe it or not. When I was going through one of the darkest periods of my life, through a divorce, very broken in my life. My parents went through a divorce, and my first wife divorced me and broke me very badly. I read that book, and that's why you have the models you have today, folks, because I trusted that God would teach me how to build the S&P 500 models that you see today through faith in Jesus Christ alone and by the power of his blood for the forgiveness of my sins alone. If you read the Release the Power of Prayer book, it's only about 140 pages, and you really try to absorb what it's telling you, it will change your life. It changed mine. And again, the only reason why you're seeing the information in front of you today in this video is because I truly held tight to what that book taught me about faith and prayer and trust in Jesus Christ for answers to prayer. All right, until next time, I'm at brschultzSP500, and hopefully you enjoy your Super Bowl, and hopefully we see that macro peak on a late day February 11th, or maybe early morning on February 12th. For official calls 7 and 8, I'll talk to you later. I'm BR Schultz, SP500. Until next time, take care. And again, this model was also picking right around the March 21st, 24th bottom for markets for the major low with a zigzag, a 1, 2, 3 touch point, BR Schultz, SP500, systematic way of timing markets with a zigzag. And then this is the macro peak for December of 2027. So in a nutshell, in under 10 minutes, maybe near 5 actually, you've got the complete rundown from the macro to the micro to the micro to the macro. All right, race fans, I'll catch you later. Bye. So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say?
Forecast.
Use.
Use only.
Only. Right. And what's this say?
Warning.
Disclaimer.
Disclaimer. I am not
A licensed investment professional. That's Latin. So say caveat emptor. Seek professional advice prior to investing. Investing bears risk
of
financial
loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm BR Schultz. Until next time, take care.